It's been 2 weeks since our last market update that we taped the Friday before the beginning of the Thanksgiving week holiday. And at that point in time, markets were looking kind of quiet. Well, they've been anything but quiet since then. In the last 2 weeks, we've seen silver punch to new all-time highs, bouncing up against $60 an ounce. Just today, the BRICS countries have announced that their potential currency unit, the unit, will be 40% backed by gold, which is a stunning new development. We'll talk about that briefly. We'll go over the CME data warehouse failure that happened on Thanksgiving Eve, just as silver was breaking out. Coincidence or conspiracy? And we'll, of course, we'll go over all the latest charts and a bit more economic data as well. Hi, I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. If we can help you with any of your needs in the physical precious metals arena, we'd love to have that opportunity. In this update, silver rockets to a new all-time high. Meanwhile, the CME data warehouse shut down for 10 hours. As I said, coincidence or conspiracy? The BRICS launched the new gold-backed unit. Gold and platinum gain, palladium steady. We've seen the Dow, S&P 500, and the NASDAQ rebound just as they were looking like they were very weak 2 weeks ago, primarily on a sugar rush created by the potential for President Trump to name Kevin Hassett, his chief economic advisor, as Chairman Powell's replacement at the Fed. And that will bring lower rates. And of course, Bitcoin has been volatile. It remains under $93,000 as we close the week out this week. Let's get on with our charts. Let's start with silver. Here's a 1-year silver chart, and you can see silver has punched sharply higher in the last 5 trading sessions. It broke out over 54.50 that it's hit a couple times intraday and then punched sharply higher. And this happened on Thursday night, Thanksgiving evening. It started to break out when that CME warehouse failed, and then it broke out once the market trading reopened. But there's more to it than just that. Here's a 6-month candlestick chart for silver, and you can see that on Monday, November 24th, when Bloomberg reported that Kevin Hassett was in the lead to replace Chairman Powell as the new Fed chair next year, silver caught a bid and it started to move higher. That's when it tested that double top that it hit intraday at 54.50, basically 54.49 and 54.40 before it punched up to 56.50 once the CME data warehouse reopened. And now it's punched up to almost $59 intraday in the spot market. In the futures market, in the March contract today, Friday, December 5th, it actually got as high as $59.90. So silver is now holding short-term support at a new high of $56.50 with a ceiling right at $59 in the spot market and looking very strong. But this puff up that started once Bloomberg reported that Kevin Hassett could be the new Fed chair, which means Fed funds rates will be substantially lower next year. Lower rates are good for gold. That punched this market up and got it going in earnest, but it got all markets going up in earnest, as I'll show you throughout this update. Let's take a look at some of the fundamentals for silver and what happened at the CME when that data warehouse overheated, causing the market to stop trading for 10 hours. First of all, this higher silver price is bringing a lot of new demand into silver ETF flows, as you can see on this weekly silver ETF inflow chart that I got off of Zero Hedge today that came originally from Bloomberg. And that green bar off to the right is this week's silver inflows as of yesterday, December 4th, Thursday. And they're about the second highest weekly flows this year. So that's helping to underpin silver, number one. Number two, the CME warehouse failure when it overheated. Well, this started about 9 o'clock Eastern time, Thanksgiving night, and continued on until 8:30 or so Eastern time the next morning when the market reopened. And this created some domino effects within the marketplace that I'll talk about in just a second. I've created a chart of the COMEX trading on a 3-hour bar chart, and that's here, that'll show you exactly what happened when. So let's talk about this for just a second. So as you can see by that black bar to the left, Wednesday, 11/26, normal hours. For most of that time, silver traded, pretty quiet between about 52.50 and 53.50 per ounce, getting up around 54. Then we got into the Thursday, Thanksgiving Day market trading. And again, it was pretty quiet leading into the evening session. As we got open in Asia, silver started to punch up. And just as silver was testing 54.50, that's when the data center failed at 9:45 p.m. And it stayed closed until the next morning at 8:30. Now, during this time, the London over-the-counter market was open. And that's where some of the rub occurred. Because as some of you know, there's a lot of physical silver in London, but it gets hedged in New York. So it's bought in London and sold in New York. That's how the hedge works. Now, if you cannot cover your hedge, that creates an issue for you. So when the CME warehouse failed and the London over-the-counter market was open, that meant dealers in London who were selling physical silver during those hours, they couldn't buy back or unhedge their positions until the CME reopened. And that created a buildup of orders in the marketplace, which is why when the market reopened, we got a bit of that pop going. And that's right where the black arrow is. And over the next couple of hours, silver surged sharply higher. Now, this is Friday, November 28th, the day after Thanksgiving, when normally the markets are very, very quiet. So you've got a buildup of orders that have to be filled, buybacks for sales that were made in the London over-the-counter market, which got this market started. Computer algorithms can kick in and punch this sharply higher as well as momentum builds. And we got up to about $57 an ounce, a little over that, when the market finally closed Friday evening at 5 o'clock. And that was almost a $3 up move on what normally is a very quiet Friday. And then when the market reopened Sunday evening to start this week's trading week in Asia, we got a pop that took silver all the way up to 58.60 and has led to this week's gains where silver has stayed higher all this week. Now, I've been concerned that when you get a run higher like we got during a very quiet holiday week, that could lead to a sell-off once we got back into normal business trading. But that's not what happened. Silver has stayed high and has held on to these gains. Let's take a look at that 6-month candlestick chart one more time. And you can see, since we broke over 56.50 in the very top right corner, all those candlesticks are these 5 trading sessions for this week. Silver's held on to those gains. This is a very positive signal for silver. And we still have some anomalies in the silver market. When you look at how much silver is in the COMEX warehouses, they peaked, the number of ounces peaked at 531 million in early October over tariff fears that brought all that silver into the warehouses in COMEX this year. But since silver wasn't tariffed, it's been declared a strategic mineral, but since it wasn't tariffed, we've seen some of this metal move back out. In fact, almost 75 million ounces have moved out in the last 2 months alone. And some of that's gone to London to help alleviate some of the squeeze there. But we're still seeing some tightness in the silver market. And by tightness in the silver market, this is what I mean. We're now trading the March futures contract on the COMEX exchange, which is back in contango, which means that the futures market is trading at a premium to the current market. And that's for the time value of money between now and then, which is about 3 months. And at current interest rates, it's about 50, 60 cents an ounce on silver. But when you go further out in time, the forward months after March go into backwardization, where the spot market is trading at a premium to those months. And that's a sign of distress in the market. That means that in the future, the market doesn't think there'll be enough silver to fill demand. That's what backwardization means. And we're also seeing silver lease rates abnormally high, not extremely high like they were in October when they spiked, but they're higher than normal and they're jumpy. So this means there's still a lot of tightness in the silver market, which bodes very well for further gains in silver as time passes. And I think we're now looking at silver, potentially $70, $75 an ounce in the not too distant future, the way this market is shaping up. So it's been quite an interesting 2 weeks for silver in particular. Let's move on to gold. Here's a 1-year gold chart, and you can see, like silver, gold has moved higher, but it hasn't broken out of its previous all-time high. But what we are seeing is the bottom has been rising, resistance coming in at about 42.50, then again at 42.31. We closed the market this week right at $4,200 an ounce. So gold is holding gains as well. If you look at a 6-month candlestick chart, you'll see this a bit more on a granular basis. And we've got a rising bottom with a flat top at about 42.60 intraday. And again, like silver, once Kevin Hassett was named as President Trump's potential replacement for Chairman Powell, this market caught a bid. And again, that was last week ago, Monday, the starting of Thanksgiving week. And that's led to this market puffing back up on the prospects of potential lower rates. And that's what got this all started. So now silver is leading and gold is following in a switch. And when you look at how many ounces of gold there are in the COMEX exchange, they peaked back in April at 45 million ounces, and we've seen a slow attrition since then. Today, we're down to about 36 million ounces in December, or down about almost 9 million ounces have gone out. And this is normal ebb and flow coming out of record highs due to fears over tariff in April that's brought all that gold into the COMEX warehouses. So gold is much more normal than silver at this point in time. And silver still, got some issues, and that's why it can continue to lead gold higher. Just today on his YouTube channel, Vince Lanci, who's a pretty savvy trader, announced that the BRICS are launching a gold-backed unit. Now, I'm not a real expert on this, so I would defer to this video that Vince Lanci has produced. If you want to learn quickly, you're going to need about 10 minutes, what he has to say about this new gold-backed BRICS unit. Now, Andy Schechtman has done a ton of reporting on this subject, and Andy is vindicated by this announcement today. So kudos to Andy for all the good reporting he's done on what's been happening with the BRICS, and particularly the mechanisms that they've been building and putting in place to get this specifically over the goal line, where they can launch the unit backed by gold. And this is potentially a very, very big development for the gold market going forward. So I would encourage you to study up on this a bit, because it bodes very well for gold as well as time passes. Now, here's a 9-month gold chart, and I want to compare the current correction that we're going through to the correction we went back in April. And I've talked about this a little bit before, but after that couple knee-jerk moves, once we had a big run and then we peaked and then we corrected back down, we settled at a higher low against a flat top in April. And I said, a couple of weeks ago that I thought we'd go through something similar once this gold correction got underway. And that's what it looks like is what we're shaping up towards. So I do think we'll see gold challenge, but perhaps not break 43.50 for a little while. It means you've got some time still, but once it goes, we could see it move sharply higher again, just like silver has been doing the last few weeks. So you've got time to still add to your gold position, but that may get away from us the way these markets are moving. Looking at the gold to silver ratio chart, with silver punching up so sharply to 58.50 as of today, and gold closing out the week at 4,200, pretty much right on the dot. We've got the gold to silver ratio down to 71.79 to 1, which is as low as it's been in 3 or 4 years now. So silver has been playing catch up with a vengeance. And, we could see this ratio narrow further down towards 65 to 1. So silver is looking extremely hot right now with potential for more gains. Very good. While gold's gains should be good as well, but probably not as sharp. Moving on to platinum. Platinum has been pretty much sideways, and it was looking weak going into Thanksgiving week. But again, it puffed up once we got that potential replacement for Jerome Powell named by Bloomberg in the form of Kevin Hassett as the new Fed chair next year, which helped to light a fire under platinum. If we look at the 6-month candlestick chart, you can see again, platinum started moving higher after it was drifting lower, and it's gapped higher now. It's broken that downward trend that was in place. And we've now got potential short-term support about $115 higher than it was at $16.15, with resistance at about $17.50. So platinum is looking pretty good right now. And there's still time to accumulate platinum before it breaks out over $17.50. If gold continues to move higher, it will help to pull platinum up as well. Meanwhile, palladium remains steady, and it again is, biased towards the upside after it was looking kind of weak going into Thanksgiving week. But again, those gains have been mostly held this week. 6-month candlestick chart, you can see that in a bit more depth. We've got support right at 1380. I've put resistance at 15.25, brought that down a little bit. So we're in a pretty tight range here, but I don't see as much prospects for palladium in the short term as I do for platinum or gold, and especially silver, the way this market's moving. So I would focus on silver, then gold, then platinum if I were a buyer at this point in time. Meanwhile, moving on to the dollar. The dollar has been in an uptrend, but it's just hit a double top just under 100.50 on the dollar index, lower right, and now it's weakening again. And a lower dollar, potentially based on lower Fed funds rates and a potentially weakening U.S. economy with jobs becoming more problematic. We'll talk about that in just a second. It bodes well for further dollar weakness, which will help to put a tailwind behind precious metals. So the dollar, which has been in an uptrend, looks like it's breaking down a bit. We'll have to see whether it's really going to break down further or not. But this potentially could add more fuel to gold and silver running hotter. Moving over to the equities markets, this is a 6-month candlestick chart of the Dow. Once Powell kind of took the Fed funds rate cut for December off the table at the end of the October presser, the markets fell. But again, when Kevin Hassett was named as the potential replacement for Chairman Powell, what happened? The markets caught a bid, and then we got the weak jobs report from ADP a couple days ago, and that helped to fuel potential rate cut for December, which is helping to push markets up higher now as well and bring the dollar back down. And we've got similar chart setups with the S&P 500. It was looking weak until Hassett was named as the front runner to replace Powell. And now we've got the ADP report coming out week on Wednesday, negative jobs for November, and that's helping to fuel the prospects of a rate cut for the Fed next week, another quarter point. And we've got a similar setup in the NASDAQ. Meanwhile, Bitcoin continues to languish. It's broken major support at 99,000. It's holding in a range between about 88,000 and 93,000, but it can't seem to get momentum going. So it looks like Bitcoin could weaken a bit further here. So it has rolled over sharply. We'll just have to see how that plays out. Moving over to the U.S. economy, briefly, we saw ADP report that the U.S. economy lost 32,000 jobs in November. And this is the 4th month out of the last 6 where the ADP has reported negative job growth or a loss of jobs. So there's only been 2 months in the last 6 that the ADP has shown employment creation. But a bit more troubling is where we're losing those jobs. Information technology, where the black arrow is for the month, lost 20,000 jobs. Professionals and business services lost 26,000 jobs. These are the kind of jobs that AI can replace. So this is not so unusual that we're seeing job losses in areas where AI can easily replace humans. But what is a bit disturbing is the fact that we lost 120,000 jobs in small businesses between 1 to 19 employees and 20 to 49 employees. This is about half of the employment engine in the United States or small business. And if small business owners are letting people go, this is not a good sign for the economy in the short term. And these are big losses month on month. So this does not bode well for the economy going forward. It means we could get even faster rate cuts than we're expecting just with the replacement of a Fed chair. And that, of course, will be good for metals. So that's our update. Here's our website if you want to check us out. Please subscribe to our YouTube channel. Thank you for watching this video. And if you want to get in contact with us, this is how you do so. So as always, I'd like to thank our clients for the loyalty and trust that you've placed in us over the last 27 years in business. We're about to enter our 28th year, and without you, we wouldn't have a business. So never a day goes by that we're not grateful for your loyalty and trust and support. So as we enter into the last full month of the year, I expect that we'll probably see most markets go kind of sideways, but the precious metals markets could be the one sector where we see continued gains, especially for silver, the way the setup is in the market right now. You know, a few weeks back, I said that we had kind of a hair trigger on these markets, and especially for silver. And we've seen that partially pulled, but there still is another shoe that could drop for silver in particular, taking this market higher still. And I think that those chances are likely. If it doesn't happen in the short term, it'll certainly happen as time continues to pass. So that's our update. Thank you so much, and have a great week.